Will Bitcoin experience a downside breakout? How should I handle my long position? If you're interested in knowing more about this, please keep watching. Let's first take a look at a long position I'm currently holding. I opened it at around $28,500 for Bitcoin. The current profit has experienced a significant retracement, leaving only around $36,000 in profit. And that's before accounting for funding fees. Since I've held this position for a long time, the accumulated funding fees are quite substantial. However, there is still approximately close to 1 million NTD in profit. If you also think the trade is favorable and want to give it a try, you are welcome to click the Bybit link below any of my videos. By completing the KYC process and depositing $100, you'll immediately receive a Bitcoin contract position worth $1,000. You can choose to go long or short. Now let's get back to the Bitcoin market. In my opinion, we are currently in a very dangerous situation. What do we fear the most? We fear Bart pattern. What's Bart pattern about? Let's look at Bart's hair. It represents an upward movement, followed by oscillation and then a decline. This is what we fear the most. Will we get such a pattern? Let's see what comes next. Will it break through the support level? First, let's start by looking at the 4-hour time frame. Let's examine the condition of the support level we are currently at. What is its quality like? We can observe that this support level has served as a buying demand zone. Every time we touch it, there is a corresponding bounce, and it quickly demonstrates buying demand. At this point, it can be considered half of one. However, you may notice that both the frequency and the number of hits have gradually increased over time. This situation indicates a depletion of demand at this level. If the support level we are currently at exhibits strong demand, we would expect to see a vigorous upward bounce when hitting this support. Similar to what we have seen previously, this indicates the presence of demand. However, you can observe that currently, when the price hits this support, it isn't giving a significant bounce. For the bulls, this is a signal that requires close attention. As you can see, after touching, the bulls did not counterattack or generate significant trading volume. This situation suggests a weakening of buying demand at this level. Let's review the past to see when the demand had subsequently appeared. After it did not appear when it was supposed to, we can observe that at this position, for a classic example, around the support zone at approximately 29,800, we should have seen a rebound with bullish candles. However, you can notice that it later broke through with consecutive bearish candles. Furthermore, in earlier market conditions, such as at this position, we also had some rebounds, but without significant strength, and instead, a consecutive strong supply of sellers appeared. This situation is quite unfavorable. If we encounter consecutive supply areas in a demand zone and break below, the probability of a true downside breakout will greatly increase. Now, let's take a look at the current market situation. Although the trading volume at the moment is not very low, the demand has already weakened at this level. This is a fact. In my opinion, if it wants to get a downside breakout and completely discourage the bulls, we must see a bearish candle with exceptionally high trading volume at this point. If such a bearish candle appears, it is highly likely that a true downside breakout will occur. Therefore, we should pay attention to whether there will be a substantial increase in bearish trading volume in the near future. Now, why hasn't there been a downside breakout yet? The reason is that the demand is no longer sufficient, and the trading volume of bearish candles is still relatively weak. However, if we have insufficient demand, and then see an increase in bearish trading volume, the probability of a downside breakout will greatly increase. Now, let's return to the 4-hour chart. On the 4-hour chart, we can observe that the highs at this level have been continuously decreasing. We keep getting lower highs. If we switch to a smaller time frame, we can see that convergence is gradually forming. You can notice the declining trend of the highs. And this trend line is the one we need to break through. If we want to give the bulls a glimmer of hope, we must break through the trend line we have been suppressing. Additionally, we need to see a bounce occurring below. Currently, on the smaller time frame, we have had 2 rebounds. But if in the upcoming rebound, it becomes weaker, and the height of the bounce diminishes, indicating weakening demand, ultimately, it will break below. We should closely observe. If such a situation occurs, If it experiences a downside breakout, the positions we added above the white line must be closed, and bullish positions must be exited. Now, of course, let's assess the magnitude of the pullback. If the price drops, we see a relatively low volume drop. A downside breakout with shrinking volume, even breaking the previous low, but with decreasing volume. And then the second candle immediately pulls it back. Then I would consider it as an opportunity for the second wave to begin. Because this spike here is just to shake off leverage positions. As you can see, although we've had a prolonged pullback, most of the necessary change of hands has taken place. And we've had enough time. However, the magnitude of the pullback is not significant. So perhaps some high leverage positions haven't been shaken off yet. We've only reached 236. So maybe there are still some high leverage positions that are still here. I believe that if this wave is a false downside breakout, it's meant to shake off the high leverage positions. Once the high leverage positions are cleared, and the necessary change of hands takes place, then if the price climbs up back again, it will be the start of the second wave's upward movement. Now, do I have plans for shorting? Personally, I currently have no plans for shorting. At most, there are two possibilities. First, continue holding long positions. Continue holding long positions if the support level remains intact. Second, do nothing at all. I don't have any plans for shorting. Why is that so? Because currently, on the daily time frame, we are still in a bullish phase, both on the weekly and daily charts. Since we are still in a bullish scenario, transitioning to a bearish one would require time. In this time frame, it's only around 20 plus days, close to a month, which is not enough to generate a bearish trend. Perhaps the time and volume at the top portion are sufficient. But right now, we are only at the upper edge. Of course, if you are entering a short position at the very top, for example, in the range of 31,400 to 31,500, and you have a very bearish view, meaning you believe it's a distribution zone, holding a short position is indeed possible. However, if you truly want to capture the complete reversal of the trend, opening a short position directly at this point is quite risky. We can carefully observe whether this level is broken. If it is broken, we can do an emergency live stream for you. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye bye.